Hello traders and welcome to another video review. Today is Tuesday, August 4th, 2026. Let's take a look at the economic calendar for today. As you know, we only talk about the high important data releases that might have an impact on the markets. For today, the one marked on red is job openings data scheduled for release at 4 o'clock. These data are obviously from the USA. There is no more high important data releases for today. Well, after last week, we should be quite happy with the various data: Fed interest rate decision, Bank of England interest rate decision, Bank of Japan interest rate decision, European Central Bank interest rate decision. All from the last week are being traded, are being preset by the market participant this week. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar, as you can see, definitely hits the upper channel line. So our channel is okay, despite the fact that we moved a little bit lower out of this channel, but we bounced from the technical support at 1.1363. So this situation here is still very bullish. We hit the extremely overbought conditions. Let me place the level of 50 on the other side. Let's watch just a second what is going on. There you go. Let's say 50 is around here. Oh, where's my line? It looks like this line is quite hard to place on the chart. Let me just do it like this and maybe this. That's the level of 50, right? So there's a little bit of the room towards the level of 50 to test it. There's a little bit of the room to the downside towards the next technical support at 1.1475. Right now we are testing middle of the channel and 1.1503. Now I'm just wondering what would happen if we could move this channel, this lower channel line, towards the newest data, which is here, and how this will eventually be affecting the other line. Let me just move this line if I can. Yes, I can move it. However, it looks like, well, this low is here, so yeah, I think that this low might be here. Let's say we're going to the extremes, and now the situation looks like this. Another very good channel. You can see that we are sitting just on the channel, on the top of this channel. 1, 2, 3, 4, 5, 6, 7 swings means long wave free, and means impulsive wave, not actually by the book. 7 swings means some other situation here, like double zigzag, for example, right? Or extended wave free. However, as far as I can see, this wave free might be too short for the fuller impulsive wave development to the upside. Nevertheless, what we know for sure is that we have the technical resistance here, and we tested the upper yellow channel level. 1.1559 is the swing high. Now pullback, we will see what will happen in the nearest future. British pound, almost the same situation. Why we didn't hit this level here? Yes, we hit and broke. Why not here? Because we tested this one. So that one is not being respected by the market. So let me just, there you go, exactly, this is the level that we want to place on our chart. So that was the high. 1.3508 is the technical resistance, as you can see. Here, this one is ignored. We went lower. After this, 1, 2, 3, 4, 5 ways to the upside is bullish, and it's impulsive into the extremely overbought conditions. Now a little bit we are a little bit lower, a little bit down, so it looks like this market might be seeing very nice support between 1.3399, 1.3282. Sorry, 3382, obviously. So if there's a bounce from this level and then impulsive movement to the upside, this situation here is definitely bullish, and we might see another movement to the upside on the cable. For now, pullback. US dollar versus the Japanese yen after the intervention looks quite busy doing nothing. bounce from 155.24 is now testing 150.751. All of these levels now are technical resistance. Obviously there's plenty of them to change. Let me just remove the weak ones, because as you can see, when there is an intervention or some kind of a impact of any central bank on the forex market, your levels doesn't matter, except the big one on the daily or weekly time frames. Okay, as you can see, the technical analysis here and supports were not enough here for the for the scenario. But after the intervention, after the volatility is gone, after the big boys stop playing with their toys, now we can see the aftermath. And what we can see here is clearly very nice zone here, 160.97, 160.44. This is obviously the supply zone. I think those two levels were ignored completely. They don't matter, like, there you go, like nothing. Big movement to the downside. This level here is quite good because the market reacted to this level, as you can see around here. This level is obviously strong, and this is strong support. It was strong support, now it's strong resistance. Now it's the question what we are going to do with this one. I think we should relabel it to the resistance 157.69, 157.40. So this is the current situation, but look at this, we are still playing inside of this big range here, from the thick green line to the thick red line. So despite the intervention, the market didn't manage to drop below it. That is telling us something for the longer term. That is telling us what is the range to play, even if the central bank is doing the intervention. So this is very important data for you guys. You have it right in the front of your eyes. Let me just add last level here for the low of the intervention, because of that was the liquidity low, and we got this very nice zone to the upside. So the current situation on the US dollar versus the Japanese yen, pullback after the intervention. Gold market doesn't do nothing, doesn't do anything, inside of the range, inside of the yellow channel. But I think this situation here is telling me that we are not going to have the wave Y low at this level, because none of this looks like impulsive development to the upside. None of this. So it looks more like the just another let's say maybe some sort of the connector, wave X connector or something like this. We will see in the future, but it doesn't actually looks like impulsive wave. SP500 for our time frame chart is showing us big rebound. I think we can delay this level these days, or leave at least one, or that's it. Big rebound towards the all-time high. If we switch to daily, S&P 500 is now moving very nice bullish engulfing. Look, bullish engulfing after the pin bar, full bullish engulfing, movement to the upside, 1, 2, 3. It looks like the fourth day in a row that will be up. Breakout above 7,620 is bullish. We need only 20 points for the S&P 500. Crude oil going back towards the gap. You can see the current situation here. And crude oil wants to fill this gap. For now, it's just a waiting game. To be honest, all of these blue areas are the retake gaps. And it looks like this situation on the market is definitely in line with the current geopolitical developments as well. So our technical analysis might be a little blind here. At least we got the levels, that's fine. We got the long-term levels, that's even better. Nevertheless, if there is anything in the news wire about the current situation in the almost or something like this, our levels are useless basically, because the market will react in panic, most likely in panically buying, panically selling. And as we know, we got on the other side of the of the ocean the president of the United States. If he will say anything about the ceasefire, the market will treat it as another good reason to sell off the crude oil. Bitcoin, the last but not least for our time frame chart of the Bitcoin. How does it look like here? Well, look at this chart. It is pathetic. Nothing is going on here, to be honest. We got for sure some sort of the nice technical support here. 62,533. As you can see, when we get there, there's a little bit of the bounce, a little bit of the bounce, a little bit of the bounce. Someone is protecting this level, despite the fact that we have this little bit of the liquidity graph. Yeah, because that stops here, right? So there's a little bit of the downside and then the upside. Nevertheless, it doesn't actually look like this market wants to break above this trend line here, so it might be a little bit tricky for now to see what is going on the Bitcoin as we trending, as the trend line is being used these days. So purely technical trading, low volatility, lack of a patterns except of this one. The trend line, no flag, no triangle, no nothing. So let's wait for a better days on a Bitcoin so we can see what is going on. For now, there is a possibility to move to the downside. If there is no breakout to the upside towards 66,000, there is a possibility of movement lower. So that's the situation on the markets. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.